and this is Forex 101. In this class, we'll be going over one of the most commonly used momentum indicators, the Relative Strength Index, otherwise known as the RSI. The Relative Strength Index is used as a tool in technical analysis. It measures the speed and change of price movements to evaluate overbought or oversold conditions in the price of an asset. The RSI is displayed as an oscillator, and traditionally values of 70 or above indicate that price is overbought and preparing to fall, while a reading of 30 or below can indicate that price is oversold and preparing to rise. Let's dive into how we can use this knowledge to analyze charts and make educated predictions in the market. All right, you guys, so I'm going to be going over the RSI, and this is probably one of my favorite indicators just because of how simple but how effective it is in predicting price movement. All right. This indicator not only can be used to help you find entries into the market, but it can also help you find re-entries on continuation within the market. Not only that, you guys, but this specific tool is also really great at pointing out reversals within the market. So let's just go ahead and jump straight into it. So in order to add the RSI, the Relative Strength Index, onto our chart, we're going to go ahead and scroll up here to where it says Indicators, and we're going to type in Relative Strength Index. And as you guys can see, again, this is one of my favorite indicators because this is, in fact, one of my favorite indicators. I literally use this all the time as well, even in my current trading strategy, you guys. So I'm going to go ahead and tap it once. And now you guys can see we have the Relative Strength Index here on our chart. So when you first add this Relative Strength Index onto your chart, if you go to the Settings tab, you will notice that the length of this RSI is 14, right? I'm going to go here to Inputs, and the RSI length is 14. So you guys, this is kind of the default setting. And with this setting, you will be able to find a lot of great entries, a lot of great continuation entries, as well as a lot of great reversal opportunities on this setting. But another popular setting that we like to use when using the RSI is not just the 14, but also the 5. So again, I just want to bring to your attention, you guys, that when you are setting the length of your indicator, you are really just telling this software platform how many candles you want it to measure. So when we have the RSI length as 14, that means that this indicator is going to be measuring the last 14 candles in order to produce its current data. And when we change the RSI length to 5, all right, you guys, 5 is another common input length that we like to use on the RSI. That means that we are going to be taking the relevant data from the last 5 candles and putting it into this one little indicator in order to get an idea of trend direction and where the market is going to go. So now that I have this changed to 5, I'm going to go to the style. And I'm just going to go ahead and thicken our actual RSI. I'm going to make it the 3rd thickness just so we can really see what our RSI is doing. I'm going to leave everything else the same. Make sure you guys keep your RSI upper band as 70, your middle band as 50, and your lower band as 30. All right. And I'm going to explain to you guys what each of these levels mean and why they are important when it comes to using this RSI indicator. So I'm going to press OK. And then you guys, I'm just going to go ahead and zoom into the RSI because this is all that we need to focus on right now at this point. So we have our top line, you guys. Our top line represents our 70. Going to change this color to white. And let's just make it a little bit bigger so we can really see what's up. All right. So our top line, this is going to be our value of 70. And then we have our middle line here, which is our 50. Now this one I'm going to make a little bit smaller. Let's make that one back 20. All right. And then for our bottom level, this is going to be our 30. All right, so now we have each one of our levels defined. We have our 70, we have our 50, we have our 30. So now you guys, I'm just gonna take this a step further, and I just wanna label our 70 as our overbought signal. All right, so whenever we see price come up here to the 70 range, we know that price is currently overbought. All right, then we have our 50. We can think of this as kind of like our neutral, or really like our home base. Let's call this our home base. All right, we have our 50, our home base. And then we have our 30, you guys, which is actually going to be our oversold signal. So what this means is when we have price come up here above, right? Price is going to be represented by our purple RSI line. So whenever we have price come up here above our 70 line, we can assume that the market is currently overbought and ready to sell, okay? Now, when price comes below our 30 line, right? Again, price represented by our purple RSI. Whenever price comes below our 30 line, you guys, we're going to take this as an indication that price is currently oversold and ready to buy. So again, let's just talk about these terms: overbought and oversold. So if something is overbought, that means that it has too much buying power, right? So if there are too many buyers in the market, there's only a matter of time before the sellers come in and take control, even if it's just for a short period of time, and vice versa. If we see price is currently oversold, it's only a matter of time before we have buyers come in and take control, even if it's only a short amount of time. So as you guys can see, we have multiple points here where price was oversold, right? This was an opportunity for us to buy. So let me change this to green, right? This was an opportunity for us to buy when price came below our 30. This was another opportunity for us to buy. This was another opportunity for us to buy. This was another opportunity for us to buy. And then we had a final opportunity to buy. Up here, we had an opportunity to sell, right? Because price was overbought. Then we had another opportunity to sell, another opportunity to sell, another opportunity to sell, again, another opportunity to sell, and then we had a final opportunity to sell. Now you guys can see we currently have price ranging in between our 70 and our 30, and it's currently around our home base, which is kind of like our neutral area. And if I'm being very honest, you guys, this is not a place that you really want to look for trades. However, you can use this area in order to kind of look for entries on continuations. And I will show you guys exactly what I mean. Before I get to that, I do just want to explain to you guys about this yellow line here. I know a lot of you guys might be wondering, okay, if the purple line is in RSI, what is this yellow line? So you guys, here with TradingView, they actually add a moving average here onto the relative strength index. And what this does is just give you a better idea, again, of the overall trend direction of the market. So whenever you have the RSI or price above the yellow line, you should be looking for buys. And whenever you have the RSI or price below the yellow line, you should be looking for sells. So let's go ahead and use this with the above chart, just so I can point out some good examples for you guys on how to use this RSI tool. All right, you guys, so when I look at the current chart, I can see that the market was buying, right? It was in an uptrend. Let me show you guys exactly what I mean. It was in an uptrend, but it actually broke that uptrend and it's now currently consolidating, right? That's what we see happening right here. Right? So we can see that the market was trending up. It broke through our trend line as support, and now it's currently consolidating before deciding whether it wants to continue this move up or if it wants to go ahead and break to the downward direction. So you guys, if we wanted to get into this buy opportunity when it first happened, this would have been a great signal from the RSI to get in. All right, so if I line up the point of this star with the candlesticks above, let's align this green star with the above chart. And we will see that at this point, when the market was oversold, we had this big red candle. Now, once we saw that price was here below our 30, we would have known that there was going to be some opportunity for us to buy, which we did get. All right. So what would have been our indication to get into this trade? Me personally, you guys, I'm going to tell you what I would have looked for in order for me to get into this trade, just based off of what we have here on the chart. So the very first thing I would want to look for is a flat bottom candle, right? I trade Heikin-Ashi candlesticks for a reason. They show me the momentum of the market. They let me know when momentum is shifting and changing within the market. So whenever I see a flat bottom candle, I know that this market is going to rise. Whenever I see a flat top candle, I know that this market is going to fall. So we already are in a falling market and the market is already oversold. So now we want to look for an opportunity where the market is going to rise. So therefore, we're going to wait for a flat bottom candle. All right. So right here, you guys, we had a flat bottom candle. On this candle, we had a flat bottom candle. Let me change the color. Okay. On this pink line, this is where we actually got a flat bottom candle in the market. But prior to that, if we just take a look at the RSI indicator, you guys, we had the RSI move from down here in this oversold range, right? And if you pay attention, you will see it slowly started to curve up. So you guys, once we got price to come above, and not only come above, but once we had the RSI come above and we had our candle close, where the RSI is left above our 30 line, we know that we have now moved out of this oversold range and that price is now on its way up. Not only that, you guys, but we would take into account this moving average, right? We saw our purple line cross above our yellow moving average, which if you guys can remember from our last training, that means that the market is buying, right? When price is above your moving average, you're looking for buys. And when price is below your moving average, you're looking for sells. So right here, you guys, within this one move, we had 3 confirmations letting us know that this market was going to continue up, right? We had our oversold signal. We had price go ahead and cross above our oversold signal. Not just that, but it also crossed above our moving average. And then up here at the top of the chart, we have a confirming uptrend as well as a flat bottom candle. So if we would have gotten into this trade, you guys, and ridden this all the way to the top, just to this point, we would have gotten over, this is the daily time frame. So yes, we would have gotten over 800 pips on this one move, you guys. Now, again, I'm saying this one move because it actually gave us an opportunity to get in again, right? So we made this money here, But then we were patient. We waited for price to come back down, pull back down, and retest to our trend line, just like this. This is where price came down and retested our trend line. Now, once we have price come down and retest our trend line, remember you guys, our trend line is just another form of support and resistance. So that means when price comes down to our trend line, we essentially want to look for some kind of reaction from the market. Is it going to break through, or is it going to reject this trend line and then continue moving up? Now, in this case, you guys, it rejected this trend line and it continued to move up. But I do just want to point out to you guys again, all of the confirmations we had to get into this trade again. So you guys could have had this first entry here on this trade. You could have been patient, waited for price to come back to this level of support, right? And then gotten in again with 2 entries on the same trade, essentially maximizing your profits. Now, also this comes into handy if you would have missed this first opportunity to get into the trade, right? Let's say you missed this first opportunity to get into this trade. This would have been the perfect opportunity for you to get into the trade that you missed the first time. So let's go ahead and just talk about our confirmations down here at the bottom. Let's go ahead and line this up. We have an oversold signal right here with this green star. This is our oversold signal. We have this big bearish candle, which represents how price was oversold at the time. Then, as you guys can see, price started to consolidate. And finally, we got our first flat bottom candle, right? This flat bottom candle would have been our indication that price was ready to continue in the upward direction. So between here and here, between our white line and our pink line, we can see how it transitioned from being oversold to pushing back up, right? We had our oversold signal here. Then we had price cross above our 30, letting us know that it was no longer in our oversold range, right? But it did not break through our moving average. So that kind of would have been like, I need to be patient. I need to wait to see if it's going to break above or if this is just going to be a retest to this moving average before it continues to push down. Now, in this case, you guys, it came up and retested this moving average and broke through. Once we got this cross above, right? Once we got our purple to cross above our yellow, once we got price to cross above our moving average, that would have been a confirmation for us as well that price was starting its move up. Now, I just personally would not have gotten in until I saw some momentum entering the market, which is where this flat bottom candle comes into play. So if I would have gotten in on this flat bottom candle and rolled this up to that top, I would have made over 600 pips on that one trade, right? Now put that together with our original entry, I would have made over 2,000 pips on this one trade, you guys, right? Because I got in on that first move, that was 800, but then I didn't pull out, so it pushed up another 600 pips, making that 1,400 pips, right? Plus the additional 600 pips that I made on this second entry. You guys, that's around 2,000 pips that I would have been able to make on this one trade setup. Again, depending on what you're leveraging, that could have been $20. That could have been $200, or that could have been $2,000. You guys, this market is truly amazing. And if you are willing to put in the work and have patience with yourself and with the market, you will see a payout. You will see a rewarding outcome, no doubt. But you cannot give up, right? You cannot give up, and you have to practice, practice, practice. If you came into this thinking that trading was going to be easy, I'm here to let you know right now that you're wrong, okay? Trading is not easy. Trading is hard in many different ways, not just from the technical standpoint, but from an emotional standpoint, all right? So please make sure you guys are taking your time to really study these indicators, practice your strategies, study the market, practice your pair, right? Find a pair that you really, really like and stick to it, right? Study it, because if you can just master one pair, you can be a profitable trader. All right, guys, so I'm done preaching. I'm done preaching for that second. I did go ahead and show you guys about the overbought, oversold signals, but now I want to go ahead and try to find an example of when you would use the home base as a continuation signal. All right, you guys, so I want to point out this little section right here when it comes to our home base and our continuation signals, all right? So we're going to be looking at this portion here between these two lines. This blue line and this blue line. So here at this point, you guys can see we had our original buy signal. So on this flat bottom candle, I would have gotten into this trade for my first buy position. So this would have been the entry for my first buy. Why? Because we had price oversold here. Then we had price cross above our oversold line. Then we had price cross above our moving average. Then we had a flat bottom candle, right? So I had all these indications to get into this trade for a buy. This would have been a small buy because there was not a lot of momentum in the market at this time, but I still would have made over 130 pips. Now, if I would have been looking for an entry on this continuation, right, not only can you look for price to come down to this oversold range, but you can also look for price to come to the home base for continuations, right? So we had price pull back down to around our home base area. And then we got the same signals, right? Price came below our home base. It crossed above our home base. It then crossed above our moving average. And we then got a flat bottom candle at the top. So here on this flat bottom candle would have been our second entry on this trade, right? Again, look, the RSI crossed above the moving average, you guys. This all is literally step by step adding up for us, okay? If you follow the steps, there's no way you can lose, all right? Unless you're just overthinking the steps, all right? It's simple, you guys. Don't overthink anything. So last but not least, we had price come down to our home base again at this point, right? It came to the home base, it touched it, it crossed back up, then it crossed above our moving average. And then again, you guys, boom, we got another flat bottom candle. So that would have been a third entry for us to get in on this trade. Again, therefore maximizing our profits, because now we're able to make more than we would have made if we would have just gotten in on one entry in this trade, right? So now that I have showed you guys about how to use the home base in order to locate continuation entry signals, I want to go ahead and find a final example of how to locate reversals using the RSI. So you guys, this is actually a perfect example of a reversal signal from the RSI, all right? And I want to talk about it from this point right here. This is where we can see the market visibly shifted trend directions at this blue line. So as you guys can see back here, we had an ongoing uptrend. Right, this was our ongoing uptrend. And then all of a sudden we had price break our uptrend and start moving in the downward direction. And you guys, this would be considered a reversal within the market. Even if it's just a small reversal or a short-term reversal, this is still considered a reversal within the market because price did what? Reverse directions. So now let's take a look at how the RSI helped us identify this reversal in the first place. So I'm going to zoom in a little bit. And we can see that price was buying, right? So we had a lot of buying power, So there's no surprise that price became overbought, right? Now we know that when price is overbought, that it has no choice but to sell soon. So using our RSI in conjunction with our trend line, this is what will help us know and confirm that price is currently reversing. Why? Because we had price respecting our green trend line, right? Our uptrend. But then once we got this overbought signal, not only did we get an overbought signal, but we had price, right? We had the RSI cross below our yellow moving average, as well as below our 70, our overbought line, right? And then if you take a look at the top, if we would have been patient, we would see that price then broke our uptrend, right? It broke our trend line that was moving upwards. Once it broke our uptrend, it then began its way onto this downtrend. And if you take a look at the RSI, this downtrend was confirmed multiple times, right? We had price cross below this moving average. It came up to our home base, retested this moving average again before it broke back through our home base and pushed down to our oversold region, right? It oversold, so it had to pull back a little bit. It pulled back to our home base, right? Pulled back to our home base before it continued to push down to our oversold region again, right? It pushed up to our home base a third time, right? It crossed down and then pushed down to our oversold region a final time before trend direction changed again. So you guys can use this indicator, the RSI, in conjunction with other confirmation tools in order to determine when price is going to reverse or continue. So that's all I have for you guys when it comes to the RSI indicator. Again, I hope you found this training useful. Not only were you able to learn how to enter a trade with the RSI, but you were also able to learn how to re-enter a trade and identify price reversals. So if you have any questions, you guys know where to reach me. But until then, I'll see you guys in the next class.
That concludes this lesson. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.